Welcome back to the deep dive. Today we're plunging into the world of Australian finance, where one institution is making a truly radical stand.
hmm They're using their core lending policy as this massive deliberate climate lever, basically telling the market the age of funding new gas-guzzling cars is over. That's exactly it. We're talking about Bank Australia, and they are, it seems, the only bank in the entire country to take this specific stand. They didn't just, create a new green loan. They announced a definitive hard ban on loans for new petrol, diesel, and this is the key, new hybrid cars.
It's a huge move, especially for a car-loving country like Australia. So just so we're all perfectly clear on this, the core fact is this ban only applies to loans for brand new fossil fuel vehicles.
Right, including those new hybrid.
And they gave everyone a heads up, right? They first signaled this way back in 2022.
They did. A full 2-year warning, with the official start date being February 2025.
So our mission today is pretty straightforward. We want to unpack this whole decision. We're going to
Yeah.
get into the why behind it. Why shut off what seems like a normal revenue stream?
And why 2025 specifically? We'll also look at the hard financial incentives they're using to nudge customers, and of course, the public reaction it caused. This is really a deep dive into how finance can be used as a proactive tool to speed up climate action.
Okay, let's get into it. When a bank does something this bold, you have to start with the big question. Why? Why would you actively stop lending money for the most common type of car on the road? It just kind of goes against basic business sense.
Well, it all comes down to their identity, really, and a very serious corporate commitment. Bank Australia isn't like a typical bank. It's a mutual bank.
Owned by its customers, exactly. And that changes everything. It lets them focus on, long-term social and environmental goals instead of just maximizing short-term profit. And they have set this incredibly ambitious target, net zero carbon emissions by 2035. Wow, 2035. I mean, that is just around the corner. So this car loan policy isn't just some green marketing, it's an absolute necessity for them to hit their own climate goals.
It is. They basically realized they couldn't credibly claim to be aiming for net zero while also funding brand new assets that are guaranteed to emit carbon for the next 10 or 15 years.
And transport is a huge piece of that puzzle in Australia.
A massive piece. Something like 43% of the country's transport emissions come just from passenger cars. So if you want to make a real dent and fast, going after the new vehicle market is one of the most direct ways to do it.
I find the business logic here, from their perspective as a smaller player, really fascinating. Bank Australia isn't one of the big four.
Not at all.
And their head of impact, Jane Kern, she looked at their car loan portfolio, which is much smaller than their home loans, and she didn't see a loss. She saw an opportunity.
It was a calculated risk, but a really smart one for a bank that needs to stand out.
Mm.
Kern said they saw a much larger growth opportunity from a small base. They're trying to, in her words, carve out a market in future in lending to electric vehicles.
So they're positioning themselves as the go-to bank for the next generation of car buyers.
The ethical choice for people who are already thinking about the future.
But that's a huge risk, isn't it? What if that wave of affordable EVs they were betting on for 2025 just hadn't shown up? That's the critical question, and it really speaks to the faith they had in the market forecasts. But that 2-year warning was their safety net. Kern was very clear about it. They chose 2025 because there was this strong industry-wide expectation that a large range of affordable vehicles would be coming onto the market. So they timed the ban to land right when they thought the market would be ready.
It did. It was a high-stakes bet for sure,
Yeah.
but one based on some very deep market analysis.
Okay, that explains the why and the when. Let's talk about the how. How are they actually managing this with their customers? It sounds like a classic carrot and stick approach with their interest rates.
It absolutely is. The whole financial structure is set up to make the green choice the really obvious choice. They've put together this very attractive package for anyone buying an EV, whether it's new or used.
Walk us through the carrot first. What are the advantages if I want to buy an EV?
Okay, so the interest rate for an EV is fixed at a pretty competitive 6.95%, but it's more than just the rate. They also get rid of the establishment fee.
Which can be a few $100.
Easily. And there's no fee for paying the loan off early. Plus, for a new EV, you can get a loan term of up to 7 years, which helps lower the monthly payments. For used EVs, it's 5 years. The whole package is built to soften that initial cost of going electric.
All right, so that's the carrot. Now for the stick. They know not everyone can afford an EV yet, so they haven't completely slammed the door on petrol cars.
No, and that's important. They're only banning the new ones. They will still give you a loan for a second-hand or a demonstration model of a regular internal combustion engine car.
Okay, so what does that loan look like?
Well, this is where the penalty kicks in. The interest rate for one of those used petrol or diesel cars jumps up to 8.95%.
A full 2% difference. Let's just put that in perspective for a second, because 2% might not sound like a lot, but over the life of a car loan, it adds up.
Oh, it does.
On, say, an average $40,000 used car loan over 5 years, that 2% difference is going to cost you somewhere between $2,300 and $2,500 in extra interest. That's the real financial pull they've created.
Precisely. They're using the price of money itself to shape behavior. And this is really just a temporary measure.
Temporary? How so?
Well, the bank has been very open about this. They've said that whether they continue lending for any combustion engine cars, even used ones, depends entirely on the growth of a viable and thriving second-hand market for EVs.
So once there are enough cheap used EVs out there for everyone,
The used petrol car loans might vanish completely. The end goal is a totally green loan book.
and this is where it gets really interesting, because that bet they made on 2025 being the year of the affordable EV, while our sources show that it is absolutely being borne out, their gamble paid off.
This is the validation moment. After waiting for 2 years, the market delivered. We're seeing manufacturers all over the world slashing prices, and right around that February 2025 date, a bunch of proof points landed in Australia that showed the affordability barrier was, well, breaking down.
Okay, give us the examples. This is the evidence that their timing was spot on.
All right, so there were 4 really big ones. First, an Australian company, AussEV, debuted new Utes utility vehicles, which are critical in Australia.
The Utes is everything.
Right. And these new EV Utes were priced cheaper than the Toyota Hilux, which is the benchmark. So that argument that EVs can't be practical work vehicles, it's starting to crumble.
If you're beating the Hilux on price, that is a genuine game changer. What else?
Second, Hyundai launched its cheapest little city car yet. Third, a newcomer called Zeekr unveiled an entry-level wagon for around $44,000. These are real, usable cars for families.
And the fourth one is maybe the most shocking of all in terms of price.
It really resets the whole conversation. The Chinese carmaker NIO released a new hatchback and has these cool swappable batteries, and the top-of-the-line version was priced at just 27,000 Australian dollars.
Wait, 27,000 for a top-spec EV? That just completely rewrites the math for consumers overnight, especially when the alternative is paying a 2% penalty on a used petrol car.
Exactly. These examples are why the bank felt so confident drawing that line in the sand. The market they were betting on actually materialized.
So, of course, when you take a stand like this, you have to expect a debate. You're restricting choice, even with a 2-year warning. What was the public reaction like when this all kicked in?
Well, initially you saw what one source called a wave of fear and loathing, especially online. Social media, car forums, they just lit up with backlash.
The usual stick-to-banking argument, I imagine.
That was the main one. Lots of comments about how banks should stick to financial services instead of playing politics, that this was mission creep.
But the bank's supporters would argue that funding fossil fuels is a political act, right?
That's the counterargument, that the choice to not fund them is just the other side of that same ethical coin. And that's where the bank's unique structure really mattered.
Because it's owned by its members.
Yes. And once those members started weighing in, the conversation shifted. On places like Reddit, users were mostly supportive. One person said they had no objection to them catering to their niche clientele, calling them a boutique bank.
Right. They're serving the customers who own the place. I saw one quote that summed it up perfectly. Someone said it was good for them being ethical, and shit is all part of their branding, so at least they're putting their money where their mouth is.
It's accountability.
Mm.
It is worth noting, though, one source did point out that another bank, Bendigo Bank, actually had better EV loan rates.
Oh, interesting.
Yeah, but Bendigo still offered loans for new petrol cars. So it shows that for Bank Australia, this was about more than just having the cheapest rate. It was about that absolute commitment.
And in the end, Jane Kern, the head of Impact, said their customers have been broadly supportive, which makes sense. They own the bank. So the big picture is that this is really being seen as a step in the right direction.
It's a powerful signal that a financial product, something you usually think of as neutral, can be reshaped into a direct tool for climate policy. It proves that these big, values-driven corporate goals can become real-world lending rules. So what does this all mean for you? We've gone through the strategy, the numbers, the market shifts. Let's boil it down to the 4 key takeaways from this deep dive, this really clear and simple story of change. First, finance is being used as a direct climate lever. It's a hard economic barrier against buying new fossil fuel cars.
The success of this whole policy hinged on cheaper EVs arriving on time. And, as we saw with those 4 new models, that is exactly what happened in 2025. Their bet paid off. Keeping a loan available for used petrol cars, even at a higher rate, is a really important temporary bridge. It's there to make sure people aren't left behind before the used EV market is fully mature. And finally, number 4. This whole move by Bank Australia, because it's a mutual bank, sets this powerful precedent for values-driven banking in Australia. It shows that a net zero promise can mean real, immediate action.
And that leaves us with one last provocative thought for you to mull over. If 2025 really is the year of the affordable EV, and at least one bank is stopping all loans for new combustion engine cars, what does that mean for the resale value of a petrol car you might buy today? Is that massive drop in value, that depreciation, going to happen much, much sooner than anyone expects?
It certainly makes you wonder about the future value of those assets and how quickly that market could turn.
We really appreciate you taking this deep dive with us today to understand this complex but ultimately clear and simple story of how one bank is reshaping the car market. If you found this useful, please do follow our channel. We're always here to give you that knowledge shortcut. Until next time.